A situation that I found myself in way too often was to identify a potential move on a larger time frame, for example, from a range low to a range high, where I would wait for the market to hit the range low, for example, and I would say to myself, I would even take a pen and paper and write it down, and I would say, okay, this market is likely to trade from this extreme to the other if this happens, right? So I would have my entry criteria. I would say that, okay, if this happens, I would buy and I would hold to the other side. What would happen 9 times out of 10 or more is that the move would eventually happen, right? The market would trade from the low to the high, for example. But I would not be in the move because I would have traded in and out of that trade so many times at the bottom. And when price, traded away from my entry, I would exit because I wouldn't have any patience at all, right? So when price actually started to show signs that now it's going to make the move, I would not be in the trade and I couldn't get in because we were so far away from the entry. So it didn't make sense risk to reward wise. So this actually is a problem that I struggled with a lot. And I don't know when or what actually got me to stop trading in and out of the trade so many times in the extreme. But when I started holding trades, longer, focusing on that narrative instead of, short-term trades up and down, I would say that trading got a lot easier for me because now when I'm focusing on the bigger time scales and bigger time frame narrative, I can just wait until price hit that range low, for example, and wait to see what kind of reactions we are getting at those prices where I might be interested in buying or selling, for example. And if I get those reactions, if I get confirmations to enter, I will just enter and then I will hold. And if I get future signs of my levels, for example, holding up or buyers getting in, we see aggressive buyers, then I will add to the trade because my ideology today is to enter when I get the confirmation, right? When I see the action I want to see on my levels, and to add size when I see that the likelihood of my idea playing itself out is increasing. So when I see more confirmations, when I see buyers entering, for example, aggressively, that stuff, right? When that happens, that is when I add size to my trade. So a lot of times when my levels fail, for example, I will only be positioned with a third of my size, for example. And that's great because many of my trades actually fails quickly if it fails. So if a trade fails, I'm usually positioned just with 1 or 2/3 of my full position. And the challenge, of course, for me is to be fully sized when the move actually happens. So that's what I'm working on a lot of the time with my trading today, how to manage exposure, how to manage open positions. One of the, I think, main ingredients or main turning points, maybe as well, for me in my trading was when I actually started to let my trading ideas play themselves out and making sure that I was actually in the trade when and finally when the move actually happens. So I didn't just, trade 10 pips, 10 pips, 10 pips. I was actually there to take full advantage of the 500 from here to there. And that's just logical, of course, if you're thinking that way when you trade. Is there anything wrong scalping extremes in a range? Of course not. It's nothing wrong with that. I just happen to find that I'm much better at holding positions for a bit longer and managing exposure in open trades and building a weekly narrative and idea that I'm trading for almost the entire week many times. That's the way of trading that I find myself to be better at. This may give you some great perspective. Just because you see many traders trading very short term, it doesn't mean that you have to. You will have to find your own way.